What's up, everybody? Welcome to another edition of Zach's Live Trader. Here with you always, I am the bearded boy wonder, Dave Bartosiak, and today, my friends, we're talking about Skechers, the shoe company Skechers. You guys just missed me cracking up because I got a Yorkie here, and he likes to cover his food bowl with like the towel that's underneath it, like I'm gonna take the food away or something. Just noticed that hilariousness happening. So that's why I'm already giggly heading into this. Anyway, so we're going to talk about Skechers again. If I think most of you here are signed up with Zach's Live Trader. But if you're not, shoot me those emails, livetrader@zax.com. We'll make sure you get all hooked up here so you can get the premium videos. Well, just like tomorrow's video we're going to do on Rambus. That's right, we had a twofer on the premium side this week, really to make up for my lack of a GBU last week. And some other things. Also, the early feedback is that maybe I should do the GBU separate, and I did think that was a better idea anyway. So I want to go back to doing the GBU the way that it was, so that you kind of have that at your disposal. So we got that too. And right now we're on Skechers. So first, what I pulled up here is a performance chart, and this shows Skechers versus the shoes and related apparel market, so their industry really. And Skechers has underperformed the industry year to date, with the industry coming in at 8.2% and Skechers only up 5.7% over that same period of time. So just something real quick I was looking at prior to coming on air. Here we have the price consensus and EPS surprise chart on Zax.com. You get a lot of information in a very compact chart here. So as always, the black line represents the price, which corresponds to the right y-axis. Red arrows, earnings misses. Green arrows, earnings beats. And the multicolored lines represent the evolution of our Zax consensus estimate over time. Things were very good for Skechers 2013, 2014 into mid-2015 as these estimates continued to tick higher over time. So lots of bullish behavior that helped take the stock from, the single digits all the way up to $50. Despite a beat in late July 2015, shares started to crater and come down. This, I believe, was hints of slowing in the apparel market. I think they had guidance that was a little bit negative. Market didn't like that, okay? Part of the reason why this thing flew so high so fast is because you had that growth premium. So you get a growth multiple when you get that growth premium in here, right? And then things started to fall apart. And now the growth has evaporated, so your growth premium's going to evaporate. But now, perhaps a turnaround. Perhaps. That we're seeing here since the stock bottomed in October of 2016. So now these EPS estimates have started to tick on up, but now the realization is that you're never going to be this growthy company that you thought you were going to be. So you're not going to command the growth multiple that you had then, and still your EPS numbers are significantly lower than they had been in the past. So overall, not the rosiest of scenarios here for Skechers, okay? So there's that. Let's take a look at the detailed estimates page, see if we can't dig in here a little bit more. Zach's ranked number 3, hold, value, style score of A, growth of A, momentum, not so much an F. They're going to report after the bell today. And again, guys, next week I'm going to try to massage these a little bit better so that we can get at least a couple of days prior to earnings. But that's why I was doing these a little bit earlier on in the day, so you have, sort of the rest of the day today to kind of figure out your strategy. That industry, which I showed before in the bottom, 26% of our Zach's industry rank. So overall, things have taken a downturn. Year-over-year growth estimates here on the revenue side, 9% for the current quarter, 10.59 for next quarter. Current year number looks like 11.79. Next year, down to 9.41. So the growth is going to slow a little bit. Not what you want to see again when this was a growthy company, and now you're saying growth is going to slow moving forward even. I don't know. EPS, they're going to take it on the chin this quarter. Looking for 55 cents, negative 13% year over year growth there. So a contraction. Next quarter, only 83 bips. So here's the thing. So I guess they're hoping for a big holiday or something, because you got year over year for this quarter is negative, right? Next quarter is only 83 bips. Somehow the current year you're going to get 11.21, and next year is going to be even better. So you're going to do better next year, 13.36% EPS growth, even though your revenues are only going to grow by 9.4%. I don't know. Yeah, Trevor, I would say that Skechers has some retail locations. Some retail, but are in some retail locations of their own. But mostly in other stores. Like, I think they got them in Foot Locker, Finish Line, that kind of thing. So, but they definitely have retail exposure. You've got analysts who've come out and kind of dropped these estimates over the course of the last week even. One's increased over the last 30 days, but you got one over the last week has dropped their numbers. Overall effect on our Zach's consensus estimate, 90 days ago we were looking for 67 cents on the quarter. Now we're only going to get 55. Next quarter, we're looking for 50 down to 48. Current year number from 171 to 176 to 177 to 175. So those bounced around quite a bit. Next year numbers have improved, though, from 187 to 198. So that's where you're seeing a little bit of a tick up there. But 3 disappointing quarters in a row. So they've missed 3 times in a row here. A little bit of negativity. But we do have here, most recently, Wedbush coming out. And, well, it doesn't look like this changed any, right? But I thought that they told us that it did drop down. I don't know about that. Oh, this is not the last 7 days. This is over the last 30 days. Okay, so pay no attention to that. All right, so let's dig into my fancy charts. And let's see what sort of moves Skechers has made in the past following earnings. Now, this calculation here looks at the 2 days before earnings and 2 days after earnings. Big move. 23% last time. Negative 17. Negative 22. 9. 5. Negative 30. So these guys move 16 or 19, 16, 12, negative 6, 8, 7, 19. Big numbers. These guys move, okay? They flat out move. And on the revenue side, we can see what these surprises have been. There's a couple of disappointments here. Surprise, surprise. So you see this, folks? It's all about the revs, okay? It's all about the revenues here for Skechers. Let's look at our Zach's rankiness. See what we've got. So, because they are 3 now, right? Coming off of an extended period of being a sell. Lots of positivity here for a long time. And then, no, lots of negativity. And now we're basically neutral on it. Okay, well, I guess that makes sense. Take a look at the stock price, and you can see that this huge drop. And then now most recently, really had some positive things going here. Broke down below that trend line on the previous earnings report. Started a new bearish trend. And then now is in another sort of positive trend here. Not too bad there, Skechers. Things starting to get better for you, but they are down at the bottom here. Commodity Channel Index. So if we were just looking purely on a technical level, this one's a buy. Because you got Commodity Channel Index down below negative 100, has now crossed over the 0 line. So that's a buy right there. Plus you have trend line support. That's a buy on the technicals. Okay? Volume right there too. Look at that thick band of volume coming in, supporting the stock at 25. So that's nice. That's good to see. Okay? So from a technical perspective, it is a bullish chart. So keep that in mind when we're piecing this together. But let's draw some fibs. Look at some moves just from here. Let's just go from here to here. And there you go, the 61.8. So right there at the 25. It also happens to be the trend line support. So that's what we've got going on there. Okay. And then the top end of the range all the way up at 30. Let's take a look at bar chart and see what we've got. Now, of course, I always forget to pull up my Epic pen. Right? Epic. Make this epic. All right. Now it's going to be epic. Side-by-side view, as they're going to report here after the market closes today. Stocks trading 26. That's what we'll use. So we got the $26 call and put to make our crude implied volatility calculation. This is great because it's only 1 day out. So the $26 call, 130 by 145, we'll call that 138. Plus, at the money put, 140 by 165, we'll call that 152. That's 290 divided by strike price. So they're looking for an 11% move. I think I'd have to agree based on what we've seen in Skechers in the past. We do know that the stock moves. So we're not going to get an awesome deal here, unfortunately, but that's okay. So these guys are pricing in a little bit of a move here on shares of Skechers. So what you got to ask yourself is, are these guys right about this or not? I don't know. Okay, now, basically a $3 move. You guys know I like to round. So that means we are playing in the 29 to 23 range. So where we're going to make our moves. And I like to just look to see where there's big open interest. There's some there. 28s. On the put side, it's a little thin over here. Nice little chunk there, nice little chunk there. This is interesting that it's so thin here, right? Then a big move there, a little bit there. Drawing my own little volume profile, it just looks like a tornado. So anyway, so nothing's really that compelling jumping off of the screen, at least on the put side here. It's interesting that that's the case anyway. So 23s and 29s is what we want to look at. So I know you guys love the instant gratification, okay? So I'm going to come back to the April 21st expiration later. But for now, I want to look at May 19th, okay, for some of this post-earnings drift to go ahead and set in. Let's change this from the side-by-side view to the stacked view. So we got calls on the top side, puts on the bottom. Now, again, you got to keep an eye on these guys. Make sure they load up the proper channel, or it is, or proper chain. That's 138 essentially. If you do the 19, 240, okay, good. Now we're good. All right. So 26, and then I said 29 was sort of the top end of that range. And that is right up there on the chart, right? 29s. That's up here. So we know the top end is really 30, but 29s is sort of what's it's pricing in. Then 23, it's pricing in here, but we know that the bottom end is really 22s, okay? So that's within there. I mean, this is actually pretty reasonable. So they've got this pegged pretty good, I think. All right, so at the money call here is the $26 call. And we talked about the 29. Let's just price out the 29. Because the chart's really telling me that 30 is where it's at, so I'm already insulated from there a little bit, and if it does move, then it'll make this move, I think. Pop up my calculator again. $26 call is going to cost me $175. If I sell the $29 call to open, I'm going to get back 68 cents of that, so that's $107 is going to be my net outlay here. The good news is the difference in the strike prices is $3, so I can make $193 on 107 or 180% on this trade. Now what has to happen is shares of Skechers would have to go over $29 per share at expiration. Okay, so that seems like a pretty big move. It is a pretty big move for it to go all the way up there, but that's what I'm looking at. So I'm going to say bullish trade is long the May 19th, 26.29 call spread for a 107 net debit. Now let's look on the bearish side. And again, guys, I'm going to go back to the front month, okay? So don't you worry. But right now, for this side, I'm going to do it this way. Okay, so now the 26 and the 23. Those are the two levels I want to target. $26 put's going to cost me $188 if I go long the $26 put. Simultaneously go short the $23 put. You're going to get 70 cents of that back. So I've got $118 at risk here. Now again, difference in the strike prices is $3 minus that $118. So you can make $182 on $118 or 150%. So what has to happen for you to make money on this is you would have to see shares of Skechers close at or below $23 at expiration. So that's the long May 21st, 26-23 put spread for a 118 net debit. Okay, that's the bearish side. Clear this out. Let's look at this front week just for giggles, okay? By the way, I guess just looking at this, I'm going to be cautiously bullish here on Skechers. I think you got to be bullish because it looks like it's turning around and the technical picture may be telling us something, okay? Plus, there's that trend line and you've got the CCI crossover. And if we're looking at the price consensus EPS, I have this uptick here. So it's giving me a little bit of faith here in Skechers. Okay, now I know retail overall hasn't been fantastic, but sometimes there's little pockets of it that do okay. So often, I mean, I think the shoe stores still do all right because it's like a thing. It's like an event. You got a new shoe coming out. You want to go there, putting on the new shoes. It feels good. You walk them out of the store. It's like different. Like that's an actual experience. It's not like going to Sears and trying to buy a tie. You know what I mean? Did I say May 21st? Bruno, obviously May 19th. There is no May 21st expiration. May 19th. Okay. Keeping me in line here, Bruno. Thanks. Okay, so Skechers, there we go. Now, let's go back. So I think it's looking okay. So now here we are, the April. So you're going to have one day. So if I had one day, one shot to make money on Skechers, if I had one shot and I only had $50 to do it, and I was rolling the dice, I think I'd roll the dice by going long these 28.50s. I think so. I think that's the play. So Lotto is long 28.50. For 53 cents, something like that, right? Because of this. If this thing gaps up, it does have a tendency to gap. So last gap up goes from 22 to 26 on that day. This gap up goes from 23 to 28 that day. So going from 26 to 29 or 28 or 30, I don't think is that outside of the norm for these guys, okay? But again, very, very risky there. Another thing you could do if you're bullish on this, again, you only got one day, so you could sell an out-of-the-money put spread here. We could sell these out of the money. And remember, it's pricing in this sort of 23, right? But if we're more bullish, we could say the 25s. So we could do even a 25, 24. Right? So here's a credit spread for you. If you short the $25 put, you're going to get 105. And if you buy the $24 put for 65 cents, it's going to be 40. Your net risk is going to be 60 cents. So you can make 66% on this trade. So here's a bull credit spread is short April 21st, 25-24 put spread, 40-cent net credit. Okay? All right, so there go a few ideas for you. And, yeah, I think overall, what's swaying me is the technical side of things. And I know when it comes to earnings, in general, you like to say the technicals go out the window. But let me give you some perspective on this. So I'm going to just remove this. And let's just pretend that we were in, this latest downturn. And in the latest downturn, we did have these trend lines. Well, maybe that's not the trend line, but you had bearish trend lines that were being put in, this sort of bearish channel that was being set up. And it kind of fell in line with that, right? Here it was at the top of the channel. Boom, gaps down to the bottom of the channel, okay? So don't ignore the technicals altogether just because there's an earnings report. Sometimes that can tell you something that's brewing behind the scenes, right, that you don't really know about. And that could be happening here with Skechers, where we've got a channel sort of developing here, right? I like this better. I know sometimes people get annoyed by me doing this, where I kind of let it break a channel a little bit and come down. It just fits better sometimes that way, okay? So it's my charts. You draw your charts however you want it. That's how I'm drawing mine. Anyway, because then this is like a little failure at that, and then you could say that it's coming down. So anyway, folks, that's all I've got for you here today in terms of Skechers. Remember, shoot me those emails, livetrader@zacks.com, if you're not already hooked up on our premium service, because that way you're not going to be able to get in Rambus tomorrow and the other premium feeds that I do throughout the course of the week. So again, I'm looking for suggestions as to what earnings reports I should be covering next week for everybody. So if you could shoot those over again, livetrader@zacks.com. I'd love to hear from you and find out what you want me to do and not to do. So that's all I got for you here with Skechers. I hope everybody has a fantastic rest of the day, and I will see you all soon. Have a good one.